Welcome back. Today we're going to be talking about a really interesting stablecoin that is new and is accessible to pretty much everybody. It's called the Gemini dollar. And what I actually like about the Gemini dollar is that it actually does seem to be quite an interesting idea in terms of a great way to earn a pretty good return. You can earn about 7.4% interest if you put your money into the Gemini dollar. Now the question is, how does this work? Well, Gemini is a regulated crypto exchange. I think this might be one of the only ones that's regulated in New York City, and of course, as we know, New York City has some of the toughest financial regulations, so that's a strong selling point. Of course, at the same time, it's important to note, just because it's regulated does not mean that makes it safe. I think it just means that it complies with a lot of strict rules, but that doesn't mean that this is guaranteed that your money is necessarily safe. I don't have a problem with the Winklevoss brothers in terms of how they run Gemini. I think that they're upstanding people. It's just that I think that we have to consider the pros and the cons of this. If someone has a lot of money, I think they could put some money into the Gemini dollar to earn that 7.4%. And what's great about it is you could actually even spend your Gemini dollars with some retailers. Actually, you can actually spend money on some retailers directly from the app. Now, the app with Gemini dollar, it claims that it's also secure. Everybody knows that. Well, if you're using Gemini, it's secure. But the other issue is that it uses some kind of blockchain on the Ethereum network. Okay, so as long as the Ethereum network, that should work well. But that's a hidden risk because there's so many unknowns with regard to the Ethereum network. Then the other issue is, how does a stable coin work? Well, when you want a stable coin, it's because you want to maintain your dollar parity. You don't want it to go up and down 10-20% on a daily basis, because that just makes things so confusing. Because if you're trying to spend money, the last thing you do is you want to receive money that goes down 10% in a day, or if you want to spend money that your purchasing value has gone down 10%. So that just makes things too complicated. But the great thing about a stable coin is that it's supposed to be the same value as a dollar. But the issue is that in order for that to happen, if your Gemini dollar is worth $1, there has to be a dollar on the other end where it's actually in something that is safe. Now, Gemini claims that every month they're going to show an audit that proves that it's actually in very safe dollar-denominated assets. Now, they show that the money is there. It's actually in two accounts. I believe one is in Goldman Sachs and another one is in a bank in New York. But the issue is that it's not all in just dollars. Some of it is in credit, and some of it like treasuries, debt assets, but that are backed by the full faith and credit of the U.S. But what does that mean, though? In our era, sometimes like mortgage-backed securities could be backed by the government. Does that mean that the government will bail out Gemini dollar if it goes down below the dollar mark? That's a little bit unclear. Also, some people I think incorrectly think that Gemini dollar is actually FDIC insured. It absolutely is not FDIC insured. I think it's very, very important to keep in mind that it's definitely not insured. So it is possible that the money could go down. I don't like things where there's a lot of unknowns, because even if you have complete trust in Gemini, the fact that they're having some of the money held in a bank, and it's not really FDIC insured completely, because only with FDIC insurance it's only $250,000, but they're holding a lot more than $250,000 in the account. And then the other amount is held in Goldman Sachs. Even if Goldman Sachs holds the money in treasuries, what happens if there's an issue with Goldman Sachs? This is kind of like the same issue that happened with Bear Stearns. That what if the credit risk is like Goldman Sachs itself? I think that's something that's very, very important to keep in mind. So while it's nice that it does pay 7.4%, I think it's important to also be cautious. I think the 7.4% is awesome, and I believe that I also believe that it actually pays you daily, which is also interesting. So that means that it actually will be compounding your returns on a daily basis. So I think that it might make sense to hold some money into the Gemini dollar as an experiment, but I think that people should almost consider it sort of like having a corporate bond, and one that has probably higher risk than a corporate bond, in fact. So I think that's something to keep in mind. And let me know if you intend to put money into the Gemini dollar. They claim that they will maintain the 1-to-1 parity with the US dollar if you buy it through the Gemini Earn page, and they actually will not charge you any fees to buy it either. So let me know in the comments below, and be sure to subscribe, and I'll see you in the next video.